Hi everyone, it's Adam Coburn here at Low & Co. Thanks for checking in, and this month we are looking at the Wellington real estate market for the month of July 2024, comparing it to 1 and 2 years prior, looking at the trends and so on. In summary folks, the Wellington values remain soft, but that being said, whilst the market is definitely still quite tough, we are seeing on the front line that it's not quite as tough as it was kind of for the 6 to 7 months after the election. The last couple of months we've seen new listing volumes slowing down, as is typical for winter of course, and the lower levels of new stock coming to the market, the reduced choice for buyers has made it a little easier to sell stuff, little bit better for vendors. So my message to sellers is the market is a tad better than it was sort of 2, 4, 6, 8 months ago. My message to buyers continues to be make the most of these conditions while they last. So let's get into the detail. Median sale price $765,000 in July versus $733 a year ago, so that's up 4%. These numbers, they're bouncing around, right? They've been broadly level since about July 2022. It's up a bit, down a bit, up a bit, down a bit. Over the last 4 months or so, we've seen these numbers come down a bit, as you can see there from the blue bar chart. So this month, over the last 12 months, we're up 4%, but last month we were down a bit and so on. So I wouldn't pay too much attention to the absolute details. Broadly speaking, we've been roughly level since July 2022. But the better indicator of underlying values, if you follow these videos, in my opinion and the opinion of many other commentators, is the Real Estate Institute House Price Index. So let's have a look at that. This league table here, you can see here, Wellington still holds the auspicious privilege of being in the lead of these league tables, having fallen furthest of all the regions in the country since the peak in late 2021. So we're now down almost 25% at 24.9% versus Auckland at 23.5% and versus the country overall at 16.7%. So we did see a recovery throughout 2023. We were down to about 20% down from the peak, and we've since lost a bit of ground there again, or back down to almost up 25%. The lowest we got to was, from memory, in late 2022, which was about 26% down. So we're not quite back to those levels there, but we still have lost some ground over 2024 in general. Over the last year, you can see there, minus 0.3% for Wellington, so broadly level. Auckland, interestingly, down 2.4%. So that's that's almost the biggest drop, but Wellington about level, but that's hiding the trend that we saw in the meantime, which was a recovery and then a deterioration again to end up flat from on a 12-month basis. So over the last 3 months, you can see that weakness coming through there, 4% drop, and that's the pretty much, with one exception being Northland, that's the biggest drop in the country. Auckland over the last 3 months down 2.4% and 1.9% for the country overall. So let's look now at the detail around Wellington region and the 4 main territorial authorities around the city. So you can see there, as I said, over the last 12 months, minus 0.3%, broadly neutral. Over the last 3 months, a loss of 4%, 1 month, 1.8% down. And if you look at the trend there, you can see that throughout 2023, the blue chart there shows we were in positive territory most of the time. The orange line is the 3-month moving average, or the cumulative average, sorry, I should say. So you can see that throughout a lot of 2024, we've been in negative territory in the Wellington region, and the orange line, the 3-month result there, clearly showing the trend falling throughout most of this year. So gently rising throughout 2023, falling away through most of 2024. Over the last 12 months, you see there the different territorial authorities. So Wellington City and Lower Hutt have been particularly weak over the last year. Upper Hutt and Porirua not so much, faring a little better. And over the last 3 months, again, Wellington City faring really quite badly at a 5% drop over the last just the 3 months. And you look at the graph there for Wellington City versus the Wellington region, you see there's a much more variability there, more of a sawtooth, and we have deeper troughs and higher peaks. So compared to Wellington region, which has fallen 4% over the last 3 months. Wellington City, 5.1% down. So that orange line just going a little deeper throughout 2024 for Wellington City versus Wellington Region. Moving on now, number of new listings. 575 in July 2024 versus 371 12 months ago and 546 2 years ago. So at 575, a little bit more than we were at 2 years ago, a lot more than we saw 12 months ago. But again, 12 months ago, vendors were seriously on strike. If you look at the red trend line there, you see in middle of 2023 last year, we were at really very low levels of supply. Vendors had seriously been on strike because the results throughout 2022 were so bad. Ironically, that then produced improving results in 2023, and then the vendors decided, let's bring our properties back to the market, especially after the election, and that saw the massive recovery in new listing volumes, as you see there from that red line, showing the trend, an absolutely enormous increase to really very strong levels, very high levels of new listing volumes. Over the last 2 months, as is typical in winter, June and July, a major drop-off in new listing volumes coming to the market when compared to the 4 months prior to that. And indeed, if you look at July numbers at 575, a little above what's normal for July at 539. So whilst we've seen a significant drop-off, as is typically the case as we enter winter, compared to February, March, April, May, we are ahead of what's normal for the month of July. And that showed there in the comparison with 12 months ago, so 55% more than we saw last July, as I said. How many sales taking place? 584 in July versus 438 in July a year ago and 509 2 years ago. So again, a similar sort of a trend for the month of July. A big increase over where we were 12 months ago and a bit of an increase over where we were 2 years ago, but compared to what's normal for July at 626, we are still not keeping pace with what we normally see for the month of July. So interesting, because as you see, we've seen a massive increase in the number of new listings taking place, and even in July we were ahead of where we typically are for July in terms of the amount of stock coming to the market, but the amount of sales taking place, whilst it has increased, is still not keeping pace with what's normal for the month of July. Again, you see that in the red trend line there. Yes, we've seen an increase in the number of sales taking place, but it's been a moderate increase, a gentle increase. We haven't seen the absolutely massive increase that we saw in the amount of new listings coming to market. So huge increase in new listings volumes, and more gentle increase in sales taking place. So for us as real estate agents, we make our living based on the number of sales taking place, if you like. So things are better on that basis, more sales taking place. But if you're a vendor and you're interested in selling your one property that's on the market, on a ratio basis, a likelihood type of a basis, each one listing has become comparatively harder kind of since the election, because we've had this massive swamping of an increase in number of listings on the market, but only a small commensurate increase with the number of sales taking place. So the likelihood of selling has deteriorated since the election. But as I say, over the last couple of months, it has gotten a little less bad, if you like. So duration to sell, 46 days in July versus 52 a year ago and 61 2 years ago. So it's certainly less time taken than a year or 2 years ago. But 46 days is still quite long compared to what's normal. So typically we're about 38 days or thereabouts, and so 46 a marked sort of increase over what's normal compared to average. But having said that, shorter duration to sell than we saw in June, so an improvement from the previous month. In terms of inventory, 17 weeks worth of supply versus 11 weeks a year ago, 24 weeks 2 years ago, so it was really tough times, July 2022. Really a lot of inventory there, and you can see there that the long-term average is 15 weeks, and so at 17 weeks, more than 15 weeks, so that's technically a buyer's market. If you compare it to what's normal over the last 8 or 9 years though, that's more like 10 weeks. So 17 weeks, way longer way more inventory than we've seen typically over the last 9 years or so, and so that's why the market feels a lot tougher recently than it has done on average over the last 9 years or so. Number of listings on Trade Me, folks, 2653 here in August as of a few days ago, compared to 1878 a year ago and 2578 2 years ago. Broadly the same as we saw 2 years ago when the stock levels had this massive increase, as you can see in the shape of the graph there. We shot up to huge levels of supply that we hadn't seen for a very long time. In about mid-2022, we were surpassing those levels as of a few months ago, sort of February, March, April. Stock levels have come down a bit, as you can see from the shape of the graph there, as is typically the case in winter. But when compared to 12 months ago, we're still significantly ahead of what we saw at this time last year. So more supply than we saw a year ago when the market was relatively tighter. We've seen a big increase come on since the election, but over the last few months, a decrease again, which is typically the case as we come into winter, and so that's what has made the market slightly less tough, a little bit of an improvement for vendors. So, folks, in summary, Wellington values have been soft since the election. New listing volumes are up versus 12 months ago, but seasonally down as we've approached winter, of course. Sales volumes are up versus June 2024 and a year ago in July 2023, but the sales volumes have increased less than the degree to which we've seen listing volumes increase, and that's what has made the market a bunch tougher since the election. Inventory is the highest level of inventory at 17 weeks than we've seen since March 2023. Trade Me listings are up compared to a year ago, but seasonally down over the last few months as we've come into winter, which has overall made the market a little bit better for those of you trying to sell. My message, as I say, to sellers is that we are seeing a little more activity lately. It's by no means a strong market. It's still pretty tough out there, just not quite as tough as we were seeing in the 6 months following the election. Buyers, make the most of these favourable conditions while they last. Big thanks, of course, as always, to Real Estate Institute and realestate.co.nz. And thanks to you guys for checking in. If you want any individualised advice, give me a shout, Adam at Low & Co. Otherwise, have a great month. See you next time. Cheers.